Remember I called this I made a post on TikTok where I called I posted this outlook for today, Thursday 13th of March. So in the earlier outlook I posted, the the market was like this. I think the post was like this. Then I think price was around this area, so I put this arrow for price to break through this inducement, then come take the H4 favor gap. But let me make a proper. You see, this move, it's a move that started off the higher time frame. Yes, let's let's go see the weekly. Okay, look at the weekly time frame. Gold has been making series of new all-time highs since, and it has made another one today. Because of the wars going on, so gold has been skyrocketing. And okay, although probably the US are having an issue with their gold treasury, so now they are doubting if some people have stolen some of the golds there, if the golds they have are no longer what they have in the record. So I think they are trying to do a physical audit again after maybe more than 30 or 50 years. I'm not sure, but it's been a long time since they last did that. So if peradventure they find out that the US don't have the amount of gold they think they have, I think the price of gold might drop. It might affect the price of gold. So and then people even the countries trying to tilt towards Bitcoin now, towards crypto. So well, let's see how it goes. But for now, gold is still making new all-time highs, and I want to talk about how today's trade came off the higher time frame. So now, if you look at this last break here, after the break, price retraced with this big red candle. Then, if you look at where this you expect a retracement into this fair value gap. This is fair. That's a fair value gap right there, and it's a weekly fair value gap. So for a weekly fair value gap, excuse me, you expect after price taps into it for you to make your move. You can't place your order here. You are not a bank. You are not the big institutions. So where you place you can't you have to scale down to a lower time frame. You understand? So the weekly time frame alignment. Don't forget your time frame alignment. From the weekly time frame, you want to see a reaction on the 4 hours time frame. Let me enable this what I marked out. So you want to see a reaction of the what's it called? So this is the weekly fair value gap. After the weekly fair value gap, we got a reaction, but there wasn't really an entry on the 4 hours time frame. I did not trade all these days. So we're talking about the trade for today, Thursday. Okay, I took some trades here as well. But let me take them. So here you will see what happened. So here price reacted of the daily fair value gap. If you look at from the daily time frame, you could see you might be thinking price broke through, but price did not break through. Price did not break through, and the weeks do the damage, but the body of the candle tell the story. It's actually an inverted fair value gap. It's because if you look at here, there's a reason for all these things. If you just take your time to analyze, I mean to study them, you see some patterns that do actually repeat. So and for you to eat off it, then you have to fight yourself, the enemy within, which is your psychology, the greed, the fear, all of those things. You have to balance things out. That is where the real problem is. It's not really the technical analysis because everything works at certain point in time. Support and resistance, trend line, whatever. But some are just sharper than the others. But everything has its own time. And that brings me time. Speaking about time, that brings me to um to the concept of time, price and time by ICT. That man a witch. Oh. That man is a witch. So that brings me to that concept. Time. Honestly, time saves you money and it balances your psychology because you know when you are looking for what you don't chase the candles, you just wait for a particular time. You follow the price. It's actually a game changer. Honestly, if you take your time to, it wasn't easy at first. If you want to study ICT related, you have to be like someone who doesn't give up even if you are not making progress and all of those things. But eventually, when you get it, I think it's a big game changer, honestly. And I've not seen any other strategy that is close to it. Some are move pattern traders and time fitters patterns. Yes, time fitters. It filters out patterns. So some patterns will work at certain times, but with the ICT concept, you learn to read price. You learn to honestly, it's interesting. So as I was saying, now price reacted of the daily time frame, yeah, I mean daily fair value gap. How is daily fair value gap? Let me delete this. I think this video is taking longer than I expected, but it's okay. It's for educational purpose. Um, so time reacted of the daily fair value gap. Yeah. Then I think this was on Wednesday. So I think I caught a trade here as well. So you see, daily, let's scale down. Normally, for the daily time frame, you scale down to the 1 hour, time frame. But there was nothing really tangible on the 1 hour except you check the 4 hours. Then when you check the 4 hours, that's when you see this fair value gap. And sitting right above it is this inducement. I called this trade yesterday. Yes. And I caught this trade yesterday. Is this inducement? So with this inducement, oh boy, you are you are good to go. And look at the time. That's what I was talking about. Look at the time. Just when New York is opening, and there was a news yesterday. So the news was even the what's it called? The catalyst for this move. When you know how to read your price, when you know how to read the charts, there are certain news that you are not scared of. You are not scared of trading them. You understand? I think sometimes I trade NFP, sometimes you avoid them. I think you just know when to. You know when to. Yes. Sometimes I trade, sometimes I avoid. I think CPI, yes, yes, it was CPI yesterday. It was CPI yesterday. So I traded it. I think it was after yes, it was after the news release. That was when price came down. Yeah, even though there was a bullish move on other pairs, because the news was against the US dollars actually. So other pairs went bullish, but data came down within minutes. But I traded it and I made something of it, and afterwards I still got this. So yes. So yesterday I got this as well. The same thing I was anticipating for today as well. The same thing because where's our target? Price is coming from. Price has reacted off a weekly fair value gap. And for price to react off this weekly fair value gap, the new target, if it's a true reaction and a reaction that will last long, then the next target is the high. It's the high that price is coming from, which is this high. That means gold is going to make a new all-time high. Now we're on the 4 hours time frame. That means gold is going to make a new all-time high. So on the 4 hours time frame, we did this day before yesterday, which was on Wednesday after CPI. Now today I anticipated the same move for today because yesterday ended here. We broke through this barrier, and the next target is this all-time high after breaking through this barrier. So I anticipated that price will come down and do the same thing it did here in this uh 4 hours 4 hours favor lookup. So I noticed the video I recorded earlier, then the audio stopped here. So I'm doing a voiceover to the rest of the video right now. So here there's something I learned, which is the order block, and my way of selecting the order block that price will mitigate before completing the moves. So I've seen some of this recently, but I think the alchemist strategy or something like that. So I've seen them using this line. They prompted me to start using this line as well, and I noticed it's actually very accurate for my order block. Most especially when there's an if it aligns with a fair value gap and there's inducement above it. It's not a pattern, but it's a style of trading. You know, when you understand how to read, you have different entry types, but it's not a pattern. Some people trade like patterns. So on this 4 hour fair value gap, I was expecting price to retrace to for today's trade, just like my outlook stated. But then I observed something. I observed around a particular period of time. If you notice, as we started London session, price started retracing down into the H4 fair value gap. I say yes, correct. Let's go. But along the way, I just noticed a big candle out of nowhere. This is the 1 hour time frame. Let's say 15 minutes. So this big candle came from nowhere, and if you notice on the 1 hour time frame, it forms a fair value gap. As well, it forms a big fair value gap on the 15 minutes time frame. Immediately I saw that, I said, okay, maybe price is in a hurry to go to where it's going to. Definitely, that's what's happening. So, and this fair value gap dictates intention. So I would camp my bed here and wait to strike on this 15 minute fair value gap. But wait, before I do that, let me confirm something. Price needs a reason to have actually spiked from that place. It's not just doing it by mistake. So since there's no 4 hours 15 minutes fair value gap, no any 4 hours fair value gap right there, I had to go down to a 1 hour time frame. So I think, okay, the video should go to the 1 hour time frame now. Yes. So I went to the 1 hour time frame, and lo and behold, I saw this little devilish fair value gap. So I saw this fair value gap, and if you look at this 1 hour fair value gap that I'm about to draw right now, it was so tiny and I thought it was inconsequential. And that's one thing about the whole thing. It proved itself, it brought itself out, because that reaction will actually make you to go to the chart and say, okay, what's happening here? There's something that's happening. And if you look at the wick did the damage, the wick of the candle did the damage, but the body told the story. Just like ICTV will always tell you. Some what I call it the true break or something like that, and the false break. So you can see the way that 1 hour candle closed. It was like an inverted hammer or a shooting star or something, I don't know. Then followed by this bullish engulfing. So, but the most important thing was for me, candle formation is part of the ways of reading the chart as well. The way candle opens and the way they close. So now, if you go to the 15 minutes time frame, you will see the big. I'm using the 15 minutes time frame for my entry because I was targeting in 1 hour. I mean, an H4 a 4 hours fair value gap. So but price is reacting off a 1 hour what's it called, a 1 hour fair value gap. So I don't want to look at the 1 hour again for my entry. So instead of going to the 5 minutes, I said let me maintain the 15 minutes time frame. So I just camped there so as not to miss, because I know when I go over to the 5 minutes time frame, I'll see multiple fair value gaps. I don't want that. I want something solid. So I count my bet at a 15 minutes time frame, and I was patiently waiting for price to come and tap into a 15 minutes time frame fair value gap, which will be my entry. Then my stop loss will go just below the fair value gap candle, or below that low right there. I think the video should get to it very soon. And yes, what else again? Yes, there's something I loved about this. Before price came down to a fair value gap, you notice it went to break that Asian high. So it was, I liked the way price did that. It showed strength, and it showed purpose. And look at, I didn't just take the trade. Look at when the trade was for me. It was New York kill zone, exactly the time when and the New York market is opening. I think it was around 8:30, 9 o'clock. So initially I was expecting price to go to, from the Asian session, I was expecting that okay, price will come down to this H4 fair value gap, then give us a bullish move in London, then the continuation will be in New York to finish it off. But price had other plans, although he started it in London actually, but it didn't get to the H4 fair value gap. So afterwards yeah, you could see the time the price it's that entry. So it was a beauty, honestly. Oh boy, I'm yawning, but there's no sleep now. Let's see. I think the video is right now is talking about what I was saying about the Asian. This okay, now where I placed my position, where I, as a sniper, where I count my bet. So on that 15 minutes fair value gap, that's where I won price, and this was how I caught the new gold all-time high. Initially I target a 1 to 2.5 risk to reward, which is very good if you have at least 50 with 50% of a win rate, or even 40%, I'm not sure, but with 50% win rate, I'm very sure even with 1 to 2 hour, with 50% win rate, you are very good to go. So now look at this. I think I took off some of my positions when price got to my TP, then I let the others run, because I know this, like this, sometimes things can go wild and it might be your lucky day. So I just let some of my positions run, and when I saw the way the price was moving, I think I felt greedy. Then I felt, oh, I should have even leave the whole of my positions and just protect them by moving the stop loss up to certain profit levels. But it's all good. This is not a marathon. This is not just a sprint, it's a marathon actually. So yeah, it's a long term this thing. You want to, even if you make $1 million today, you still come back tomorrow to trade. So it's something you want to keep doing, and it's something you have to keep doing so far you are in the game, unless you want to take money and run away. But you won't even be able to do it. You can't. So it's something, there are moves you want to catch every day, or maybe every week, or depends on the type of trader you are, or every month, not just a one time or two times thing. So at this arrow, I'm drawing that arrow right now because I'm saying for tomorrow, Friday, which is the week's the closing day of the week, I expect a retracement to the downside. So tomorrow I expect a retracement to that, maybe buy side liquidity level. Maybe we'll take off to another all-time high next week. I don't know. Well, let's see the way we'll follow the way price what price gives us. That's what we do. You don't predict, but most of the time you predict to a certain extent, but you react as well. You learn to react as well. Yes. So that's all.